Stops near local maximums and minimums. Those stops must be as short as possible, and oftentimes I prefer to use an even shorter stop than the technical stop. As a rule of thumb, near the local maximums and minimums, we mostly have very powerful trends. And in this case, the trend is very likely to continue. And if it does for even short period of time, almost any stop of any size is going to be taken. So in this kind of a situation, I prefer to have the absolute minimum risk. So the smallest stop possible. Now let me show you what a local maximum or a minimum may look like. So let's take this trading day in the 5-minute chart as an example. So as we can see here, it is around 6 o'clock in the morning, the stop that we see here, and we can market this top wave as our absolute local maximum. So the local maximum is pretty much the maximum at which the price has been on this exact day. This is the local maximum. And as we can see, as the day progresses into the evening, we find this nice divergency that we were talking about in the previous lesson. And if we were to continue checking how the trend works, we can find out that this divergency worked quite nicely and the market exploded up. Now, here is this level that we marked. It was the local maximum for this exact day. Just for this day in the 5 minutes. You can, well, as a note, you can always find local maximums and minimums pretty much in any time frame. And in this example, this local maximum is for the 5-minute chart. So this level is the local maximum for the 5-minute chart in this exact day. And as we can see that this uptrend that began with this nice divergency has broken the daily local maximum. And this means that there is a lot of power for climbing. And if we were to find a weakness and enter into falling prices, just for the sake of this example, let's say we were to enter here into falling, the beginning of this candle, we can see that we are around the local maximum. And that means that the power of the trend is quite substantial. And the chance that this trend is going to continue is quite strong. Therefore, I would never use a long stop. And in this case, we can see that our entry, our hypothetical entry, would be around 13,248. And we could say that we could use a really short stop at the shortest possible technical stop around this location here, the previous top peak, which would be at 256. So the stop pretty much would be 8 points. And that is quite nice. However, we could actually use an even smaller one. And I personally would use a smaller one. I would use a 5-point stop. If this would be our entry, I would probably have my stop somewhere around here. Well, you could use a 1-point stop, but this is a very risky amount of stop. You still need to give the market at least some room for movement. Two super short stops, like 1 or 2 points, very often they will be pulled within a few seconds after your entry just because of a small blimp against you, and it can get quite frustrating and difficult. So something like 5 points in this kind of a situation, just as a hypothetical example of how to approach using the stops, the local maximums and minimums. And so for the sake of this example, we can also mark our smallest possible technical stop, and we can also mark our fixed stop. The fixed stop, as you can remember, was 20 points. So if this is our entry level, then our fixed stop would be around 13,268, which is not visible around here. Let's go a little bit further. And this would be our absolute largest possible stop that we could use. And in this kind of a situation, remember, if the trend continues, it will pull any stop. So let's see what happens next. As you can see, we did go into profit a little bit, and we did go beyond the previous local maximum, this level that we marked in the very beginning of this lesson. However, we did not break it. We still returned above that level. And this is already a very bad sign that we did not stabilize beyond that level. But the leveling systems we will talk about a lot in the further chapters. So let's see what happens next. Nothing nice. And here the market turns, and this is where pretty much the trend is trying to continue, this powerful climbing trend. And here we would be stopped out. I would be stopped out with my smallest possible stop level. And this would be here. Now let's see if our smallest technical stop would also be taken. Well, not yet, but boom, yes, it's taken. So the technical stop did not work. So we would have saved ourselves quite a few points by using the smallest possible stop level at this local maximum. Let's see if we are, so we've pulled this stop, the technical one. Let's see if we will pull the fixed stop. Nope, we try to return back to this level that we marked in the beginning of the lesson. We don't break it, and bang, we go higher up. So this is a very frustrating situation. It's actually the middle of the night, but for the purposes of the example, this is a very, very vivid example of the reason why at local maximums and minimums we should use the shortest stop possible. And here you can see that even the absolute largest stop that we can let ourselves have in the German market, the DAX, is still going to be pulled, the 20 points. And of course the same goes for the local minimums. Here in this example we've taken apart the local maximum example, and the local minimum is pretty much the same concept, just flipping the chart. So there you have it. Another small rule, yet a very important one. The local maximums and minimums are a sign of real power of the trend, and if we do decide to go against it, and if we do decide to trust one of the signals that we see, then we must make sure that our stops are as small as possible. In those kinds of risky situations, our risk should be kept to the bare minimum. Alright, please don't forget about the test and have fun with your homework. I'll see you in the next lesson.